Well, IT has really been one of the bellwethers as far as this series is concerned, especially in the results season, whether you talk about the large ones, the mid-cap ones, and really a name like Wipro as well, which has done particularly well. Today, we are going to talk about Infosys. The stock is a whopping greater than 10% higher. If I'm not wrong, it's one of the largest moves you've seen in Infosys for really some while. And mind you, this is coming on the back of some great returns coming in after TCS declared their numbers, after Wipro declared their numbers, some of the other mid-cap IT declared their numbers. So since then, there has been some buzz that Infosys, like other IT players, should also deliver a strong set of numbers. Now, they delivered numbers on a Q1 basis. It was a great beat. The management commentary was quite upbeat, and EPS estimates for next year were not particularly that great, and that's why that led to a lot of upgrades on the street. So what brokerages are saying, remember, Infosys is a very well covered stock with great EPS estimates and accuracy in terms of revenue growth. It's a very widely covered stock, both in the ADR terms as well as here in the rupee terms. Now, what has happened after the result? There has been an all across upgrades in terms of EPS. So there has been a 6 to 8% sort of an EPS upgrade all across the board. And when you see such constant upgrade coming in for a large company, it also leads to PE re-rating. Remember, it has had a new management, and the new management has been constantly delivering as far as their margins are concerned. So there is a PE re-rating angle to it as well. Target prices earlier from various large brokerages were in the range of 750 to 850, maybe even 900 at the max. But now the target price range is from 850 to 1000 rupees. So that's the sort of move that you have seen. This has come on the back of two things: a very strong Q1, a great outlook by the management as far as their current pipeline of order book is concerned. So when I talk about Macquarie, they said that Q1 is a significant beat. When you talk about Q1, the management commentary along with the Q1 numbers, is looking in pretty well. JP Morgan says yes, there is a overweight rating that they have. They have not changed their target price at this point of time, but they are saying that Infosys on a YTD basis has been rallying versus some of the other players. So the street has anticipated that Infosys will tend to deliver. There is still a valuation discount versus the large cap player like TCS, and that, according to them, can correct. CLSA has also written a very, very big note regarding Infosys numbers. Firstly, they have upgraded their estimates. They have maintained their buy recommendation. 1000 rupees is the new target price that they have for their clients with a buy rating. So despite the 10% move today, they still believe that on a 12-month basis, a greater than 10-12% sort of a move can happen. They are expecting margins to go up. They are expecting deal wins to translate into sales numbers, and that is something which will lead to an EPS upgrade. They have upgraded their EPS, and that has led to a target price increase. Morgan Stanley, on the other hand, has also written about the Q1 numbers of Infosys, saying that numbers are pretty strong. Execution is better than some of the other large cap peers. Plus, the company has started giving its guidance, which means they have visibility on revenue as well. Overall, a re-rating candidate is what most of the brokerages are pointing out towards.